friends, let's take a look at Ethereum together. We've had the prices up here at 236 right now. They were down at 227 during today, but actually, if we just go down to the 24-hour time frame and zoom on in a wee bit, you can see where we've actually risen up from was down here at the 222 level. We've spoken about this numerous times. We knew that there was the potential. Do I have the drawings on here? Is it the 4 hour? Yeah, we knew that there was potential for this to work out as a sort of inverted head and shoulders, or no, a regular head and shoulders. I don't know why I said inverted there. That's weird. We talked about this quite already in detail, and then we talked about where you would know that it wasn't going to be one, and we also spoken about how the because of this shoulder here, it makes it kind of easier for us to then negate it, and that the price to look out for was 230. Subsequently, we've come up to 236. So if you were playing any trades off the back of this, and say you just traded from 236 up to where we are now, you've already made 3.5% on your move. That's really good. You could easily take profit. I'm not a financial advisor, I'm not a financial advice, but you could if you wanted to. If you traded it from down here at the lows at 225 or 222, sorry, up to where we are now, you're looking at a 6.5% increase in price. Very good trading opportunities all around these areas. By the way, anytime anybody mentions head and shoulders, just bear in mind that 65% of the time head and shoulder patterns fail. So it's kind of like the weather report. I still do think it's hilarious. I don't know why nobody ever talks about this, but there's these long-term weather reports that you can get that the Met Office in the UK puts out, and they're quite open about how the likelihood of them being correct is really low, because the further you project into the future, the less likely that you'll be accurate in their projections. To the point at which there starts becoming weather reports that they put out with predicting the weather in the future, which are like less than 50% likely to be the case. I think if we go beyond 8 weeks, then there's a less than 30% chance that it'll be likely. Therefore, right, when you're watching these weather reports, you watch them to see what they're predicting and acknowledge that on a statistical basis overall, there's a 2/3 chance that they'll be wrong, right? So what you're looking for is the weather report to say it'll be sunny in 8 weeks' time. Then you know to buy an umbrella, because it's 2/3 of the time is probably going to be raining and not sunny. Do you get the point? Same sort of thing here with inverted head and shoulders. And the failure of patterns is as important as the confirmation and completion of patterns is in terms of pattern trading. This is something which is actually known amongst pattern traders, and they just don't really talk about it because it's not so meme-tastic. Instead, what you want to say is, here's a head and shoulders, this is where the measured move is, and ignore the fact that actually that's only going to be the case 45% of the time, and 35% of the time, and 65% of the time, 2/3 of the time, just like those weather reports. But of course, the weather people who make the weather reports could do that. They could use the system that comes up with the weather reports. Then they could put out an article, their show on the BBC World News saying this is our long-term weather projection, and they could say the opposite. They could use all of their models to come up with a prediction, and then realize that statistically they're 2/3 of the time they're going to be wrong, and then deliberately say the opposite. But they choose not to. It makes sense, but they're not. They don't obfuscate the data that goes into the production of these things, and you can find out. So just so you know, these things happen, right? What are we also looking at? Well, we have this descending triangle thing on here, and I want to point out quite quickly here, quite rapido, before anybody gets carried away, that this is drawn in sloppily, and I talk about these things being drawn in sloppily all the time, and that I've just cut through these bodies here and stuck it on just to make the point and be symbolic about things. If you want to be accurate about stuff, then you don't want to be going through this body over here. We could start it off and we could just take it from that body there, for instance, and go to the edge of this one here, for instance, so that you could make this a bit more accurate and drag it on down to here. This was only drawn in to give people the idea of what could be happening, not to say specifically where the levels are. But if you want to be a bit more accurate about it, then that's how you would have to look at it. Going back down to the 4-hour time frame, therefore, you can see that we've not actually managed to make up to the top of this descending triangle at the minute. And we'll be looking here towards 238 levels. Of course, that's turns us into this 240. But you can see in the 4-hour time frame, frames as well, now that we're back down at it, that we're once again cutting through the bodies, which is why I do these things sloppily, because it really is time frame dependent, etc., etc., etc. So anyway, closes on the 4-hour time frame up above this line aren't going to be so meaningful. We drew it in the 24-hour time frame, and we're also looking towards the fake out zone potentially. Our sort of grey fuzzy line is here at $242. This would be fake out territory on this one. Going up above the previous highs of 245 would be quite good in a sense for the bull case, and you could look up towards highs of the 250s areas again and be asking questions about that. But I wouldn't be too necessarily enthusiastic about that in a rush. Just generally looking at this here and saying, is it divergent or not divergent, yada yada. You're looking at this previous area in the run up where we had our head, for instance, or whatever. Let's look towards our head and say that if we close up here, then we're not divergent. If we look towards this previous shoulder and we're just looking at this, then we're not divergent. If we look at the lows in this period, there was that bullish divergence during this downward trend over here, which has led to this rise up. But all of this is all great and everything else, but it's kind of just a little bit vanity as vanity. What does he call it? Was it like income? No. Was it turnover is vanity? Profit is sanity. Is that the phrase from business? Can't remember. So anyway, what we're looking for is the sanity up here at 245 instead. If we go up to the 24-hour time frame and take a look, then you can see this is where the high came in over here. This is where we're coming in at the minute. If this were to be a downtrend, then very easily, it wouldn't take much for the RSI to go on up above here and put in a bit of bearish divergence. There's a little shout out to people in advance about that. If we were to go to the 12-hour time frame and take a look at how these things are shaping up, it's the same scenario overall. We're obviously had the sort of the you could have thought like a tiny little bit of bullish divergence here between these two lows, but that's very rich at that point, which actually was leading toward lending more towards the case of the inverted head and shoulders here, or the fucking regular head and shoulders. And yeah, I mean, well, that's going to do us, right? That's going to do us. We've got a couple of areas to be aware of. If this does just slide on down from here, then bear in mind that overall towards the left, and we've come up higher than this inflection sort of period in the 235 zone, but really we're just in the 230s zone of danger between this 242 area and the 230 area, which could be considered to be the potential upcoming range for where we are, should we actually just simply go in and put in a lower high overall. If we want to break anything in terms of like the actual structure of things, we need to be moving up above here, because since the 1st of June, is that right? Let's call it the 1st of June. Since the 1st of June, we've been in a downtrend. We had this shape here, then it moved down. We were in a rectangle. We broke down below the rectangle. That would give you an idea that we were maybe going to trend towards the downside, but actually we come back up, retested it since. That was this keep saying inverted, in this regular head and shoulders pattern area, and then that failed and moved towards the top side. But of course, this doesn't necessarily mean anything in and of itself until we start actually doing something which is different overall. Looking towards the previous inflection points here in the market and stuff, before the ones we're talking about in the 4-hour time frame, over here you can see that there's these areas where you could very easily see the prices diminish from, and indeed even at the top end of this symmetrical triangle, symmetrical ascending triangle. Just moved that other thing twice, didn't mean to. I'm trying to get this measuring stick out of the way. We did talk about, if we were to break up above this, then you could be looking up towards the highs there at the 250 area. We spoke about this in yesterday's video as well, and we could be looking down towards lows should we break down below this again, towards down to the $200 type of area. So we've got all that on the go at the minute. The fact that we're above 230 is of course quite positive for the prices, but the fact that we're below 240 is just, in the longer, broader view, just helpful for bears who are looking to add to their positions to take profit at very easy to take profit levels. I mean, we've got these profit taking lines on here at 230, 225, 220 and whatnot, and all of them would be decent enough. And if you were to just have taken it from the highs there, sort of when we opened up the episode, down to say the 230 line, you're looking at 3%, down to the 225, you're looking at 5%, down to the 220s, you're 222, 221, whatever, you're looking beyond 5%, really. And those are all very good trading moves to have had in your back pocket if you were doing this. So that's going to do us for today. Thanks so much for tuning in. We'd really appreciate it if you watched the Bitcoin video. Have a laugh there. We talk about Scottish banter. I explain, how Carl the Moon, again, Carl directly saying this to you, put your subscriptions on your channel to public, and then subscribe to the channel if you're going to continue to use my content, or else, admit it and stuff on the channel. I'm bored of that now. I know that you've seen it. I know that Kyle and yourself and Crypto and all the rest of it, who I all think are really great guys and I've got a massive amount of respect for, have all seen my channel and know about it. So I just I'm not being para. It's just the reality of things. Thanks so much for tuning in. I'll catch you all in the next episode. If we could push this up to 1,000 subscribers, it'd be amazing because I get the weekend off. Wow. I've been doing this every day since the start of the year. Apart from 2 days, once when I went to a wedding and once when I almost died. Not joking. Catch you later. Thanks very much. I'll see you in the next episode.